Okay, so we have covered how to draw support and resistances, right? Horizontal ones. We've also covered how to draw channels. So now you know at what point Bitcoin is going to take a bounce, right? Upward or downward. All of that is fine. But what about the entry? We're going to cover entries in this as well as the following videos. It's going to be a 5-part video series. First one will be entries through Ichimoku, which is what is on the screen. Second one will be entries using support and resistance. Third one would be entries using valleys. That would be on a shorter time frame. Fourth one would be entries using trend lines. And then the fifth one would be entries for moonshots. The first 4 videos will come back to back. The fifth one will come towards the end of the course because that requires a lot of critical thinking, if it makes sense. So now, having established this, we are going to start entries with Ichimoku. For those who don't know what Ichimoku is, I'd suggest you have this place in TradingView. It's called Indicators. Go to Indicators and type here Ichimoku, and you're going to get Ichimoku Cloud. I want you to select this. Once you select this, you're going to get a screen like this, right? Which will bring us to this place, right? I'm gonna spend like a minute or so going through the basics of Ichimoku before I start talking about how to use entries. Now, for the sake of the time, I'm not going to go ahead and explain the mathematical significance of each of the things. All I want you to know is how you will use them. So to right off the bat, there are 5 key things in Ichimoku. You've got a Tenkan-san, that is a blue line, which is nothing but your fast moving average. It's the fast one. Kijun-sen, it's the red line. You can't see them right now because I have removed it. It'll be the red line. It is the slow moving average. So Tenkan-san is fast, Kijun is slow. Then you have Chikou. Chikou is something that traces the strength of the trend, and it always appears 26 candles behind the current price. It's 26 candles behind. Then comes Senko span. These are the red and the green lines, span A, span B, and the Kumo cloud. You're seeing the cloud here. So all of this green and red are called Kumo clouds. That is all there is to it. So this is a fast moving average, Tenkan. Kijun is a slow moving average. Chikou is 26 candles behind, lagging price action. Senko span are the upper bounds and the lower bounds, as well as Kumo cloud, which is your bullish or bearish flow. So right off the bat, I want to tell you one thing. Kumo cloud signals for bullish and bearish are useless. Don't bother about these colors. They are pretty much useless. Until and unless you are an absolute god of Ichimoku who can just figure out the minutest of details, nah, it is not for us. So I'm going to go ahead and start opening up, right? Okay, actually before I do. So what exactly is the purpose of Kumo Cloud? A Kumo Cloud's entire purpose is discipline. What it says is, if the price is above the cloud, like you can see in this case, the price is above the cloud, you can go long. If the price is below the cloud, you can go short, if it makes sense. So you can see this is the cloud. The price has gone above the cloud here. You can go long. If the price is below the cloud, you can go short. If the price is within the cloud, right, like within the cloud, it means the market is indecisive and it suggests you, hey, don't take the trade right now, if it makes sense. So pretty straightforward. Above the cloud, long. Below the cloud, short. Inside the cloud, wait. Just wait. Don't. Hope it makes sense. Now that we know this, I'm going to start adding some more indicators. So we're going to start with conversion line, which is the blue line. Tenkin-san, it is the fast moving average. And I'm going to add the baseline, which is Keijin-san, red line. So what do the rules of Ichimoku Cloud say? Pretty simple. What it says is, in its entirety, this blue line and red line are of no use to us. However, what they say is, when the fast moving average, blue, crosses the slow moving average, Keijun, red line, you go long. If the price, if the fast moving average, like fast moving average, which is the blue line, crosses the slow moving average, the red line, and goes down, you short. Hope it makes sense. I will repeat this. If the blue line crosses the red line, like you can see it's crossing here, right? If the blue line crosses the red line and goes up, you go long. If the blue line crosses the red line and comes down, you go short. Hope it makes sense. Now that we have explained two set of rules, one for cloud, which was, and it's kind of confusing, which is why I will keep repeating these rules, which was, you only go long if the price is above the cloud, you only go short if the price is below the cloud. Also, you long when the blue line crosses the red line and goes up. You short when the blue line crosses the red line and goes down. So let's combine these rules and take it into action. Why am I starting with Ichimoku? The reason for starting with Ichimoku is because a lot of the followers are absolute beginners and they get burnt taking the entries. Ichimoku Cloud reduces this burden and adds discipline inside the trading automatically with the rules that we are doing, and we'll go through again. So let's consider this, right? We will start the whole journey from here. Okay, let's do. I'm on a daily trade. I'm looking at daily candles. And this is the point we start. So at this point, right, blue, let's say you're tracking the price is coming. And at this point, you see the blue line, slow moving average, Keijun Sen, crossing the Tenkin Sen, the fast moving average, crossing this the slow moving average. Does that make sense? So this is a signal for long. What is the price at this point? Is it above the cloud? Yes. Both the conditions are fulfilled. It means since the price is above the cloud and the fast moving average has crossed the slow moving average, both conditions fulfilled, you go long here. If it makes sense and you get it. Let's look at the next example. The price moves. At this point, the fast moving average, blue line, has gone below the red line, right? But the price is above the cloud. You cannot short it because one condition is fulfilled. Blue has gone below, but the price is above the cloud. And you only short when the price is below the cloud. So in this case, the conditions are not fulfilled. You're not going to take this trade. Let's come back and do this one. Let's look at this. Again, we can see the blue line has crossed has gone below the red line, right? It signals a short position. But where is the price? The price is inside the cloud. Can you short it? No, because it says if the price is inside the cloud, you cannot short it. Let's continue forward. Again, you can see the blue line has crossed red and gone above. It's a signal for long. But the price is inside the cloud. Can you take a long position? No. Let's continue again. And we come here and we can see at this point, the blue line has gone below the red line. It's a symbol for short. Is the price below? Yes. You're going to short it here and you get this short, if it makes sense. Let's continue. At this point, let's look at this. At this point, the blue has once again gone below the red line. Is the price below the cloud? Yes. Both the conditions for short are successful. You're going to short it and you get the entire short till here. Let's continue. Again, if you can see here, the blue has crossed the red line, right? It has crossed the red line. Where is the price? The price is above the cloud? Yes. You open a long position, you get the entire long position. I will continue giving examples so that you can get it in your head. Let me show an example. Okay, so again, now look at this. At this point of time, the blue has crossed the red, but the price at the time of crossing is inside the cloud. Can you long it? No. Even though the long trade has worked out, but if you were to go by Ichimoku rules, you are not supposed to long it. So be very clear about Ichimoku rules. For example, look at this. The price has gone below. That is an indication of a short. But where is the price? The price is inside the cloud. You cannot trade it. Again, now which brings us to the whole concept of what kind of a trader are you? Are you a beginner trader or are you a advanced trader? If you are a beginner trader, you are supposed to follow Ichimoku rules to the letter T, which means both the conditions have to be fulfilled before you take any entry. I repeat the conditions, they're very important. If the blue line goes below the red line, you short. If the blue line goes above the red line, you long. But at the same time, the price has to be above the cloud for you to long, and the price has to be below the cloud for you to short. Until and unless these conditions are fulfilled, a beginner trader should not trade and take any entry. But once those conditions are fulfilled, like in this case, is the price below the cloud? Yes. Has the blue line crossed the red line? Yes. You take a short. This is a massive short opportunity that you get. So Ichimoku provides 100% win rate if you were to follow the guidelines completely. Now, oftentimes, like we have seen in the previous example, that the line will cross, the blue line crosses the red, it's an indication of short, but the candles are inside the cloud. Now, an advanced trader can take this risk, but keep the leverage low is what I would suggest and go. Doing so would allow you to capture more opportunities than you would if you were to follow Ichimoku rules to the T, if it makes sense. Coming back to this, and let me just cover this point as well. So look at this point. At this current time, if you look at Bitcoin, the blue line has crossed the red line. That means it's an indication that, hey, you should go long, right? But where is the price? The price is below the cloud, which is a short position. So one side you're getting a long signal, the other side you're getting a short signal. What do? You you don't play this move now until and unless you can see something decisive. Does that mean you might lose out on a potential good move or a good run? Yes. But that's why we have other 4 chapters of finding an entry coming. This one is purely for beginners and for something that you want a guaranteed trade in. Which will bring you to this question, hey, if I wait for an entry, it will take me 1 month to find. What do I do? Again, this is where the whole thing comes in. You are supposed to look at these entries for every coin you have. On one day, one of these coins will fulfill all the rules that we have established, both for cloud as well as crossover. That is the day you trade that coin, if it makes sense. So although it may look, if you're just going to trade Bitcoin, it may look like, hey, I'll have to wait 1 month to find a decent entry. And even then, when the entry happens, the price is inside the cloud and I can't make the entry. Yep, you're right. Ichimoku is very strict. But again, you have 300 coins. Look at all 300. I'm pretty sure one of those coins will be fulfilling it. So what time frame do I recommend? At the lowest, I would recommend 4 hours. And at the best, I would recommend is 1 day for Ichimoku. Like 1 day is where Ichimoku shines. Having established that, I did not cover Chico. I'm going to cover Chico as well. And I'm going to add this. So let's say you're a beginner trader and you're like, hey man, I still find it risky. Like I just want few trades, but I want those trades to be 100% like guaranteed win. Chico is the added layer of security inside Ichimoku. Again, like I had said, Chico traces the movement 26 candles back, exact location. And what Chico says is very simple. Chico says, hey, if this Chico price, this green trend line is below the cloud, you can short. And if it's above the cloud, you can long. Which means now we have 3 set of rules. First set of rule is for the cloud, is the price above the cloud. The second set of rule is, hey, did the blue line cross over the red line and go up? And the third is the Chico above the cloud? If all the 3 conditions are fulfilled, you go long. On the other side, if the price is below the cloud and the blue line crosses and goes below the red line and the Chico span is below the cloud, that's your guaranteed short. Now, how often will you be able to find a setup in which all 3 conditions are fulfilled? Probably once in 1 month or 2 months. Which is why, for most of the traders out there, I would suggest leave Chico span for now. You have better chances of entering a trade without Chico span, and those trades themselves have 99.99% guarantee of success. I'm sure you can take 0.1% chance of Chico, which will absolutely spoil your setup. Having said that, be very mindful. There is no hard and fast rule that you cannot take the trade inside the cloud, but I would only advise it for people who understand support and resistances, valleys, trend lines properly, and can see multiple other setups that will help them make an entry. If you are a pure beginner, please follow the set of rules that we just discussed to the letter, and you will never, I don't know, you might take a long time to make money, but for sure you will never lose money. Hope it makes sense and hope you guys liked it. And as far as Ichimoku is concerned, I will discuss this in great detail when we go to technical indicator chapter. Bye bye.